And we tweeted it at 20 past 11. So at 12 o'clock, look at what happened. The price went above it, bought, went above it, bought. So right there, at 12 o'clock, you're in a long S&P trade at 46.47s. And that 46.47 obviously traded all the way up to 77 over the course of the rest of the morning, which is, of course, $1,500 per contract from that gamma level. You couldn't make it up, guys. You couldn't make it up. So what did I tell you about equities at the cash open? Did I say they were going to be bullish, or did I say they were going to be bearish? Bullish. How many people took a buy trade? How many people took money out of that trade because of that? How many people had the perfect level drawn on their charts against that previous cap level at 74s? So you can see that again, against that previous cap level of 74s, which we talked about this morning because we had the half-back pullback trade for the buy, then of course you can recognize that this is a higher value with a spring test right there. And obviously on the basis that that spring test is successful, you would have been able to buy into that storyline for higher prices based on the steepener that we are trading on the bond desks aggressively. We're trading that aggressively, that steepener, so we should be expecting to see equities catching a bid. And that's exactly what's happened. Equities have caught a bid. You couldn't make it up, guys. Called in advance yet again before it even happens, which is nice. So let's take a journey into the HIRO indicator this morning and see what these guys have got for us. I don't suppose Bruce is coming in after all, so we'll just have to make it up as we go along. So obviously this goes green or red according to whether the cumulative is positive or negative. And you know, obviously it just changes color based on whether it's positive or negative. It's not about necessarily the line itself. So you can see that you know, it's positive, but it's not always been positive. It's been predominantly negative at the start. Well, no, I can't see how you could have interpreted that for a trade, to be honest. Puts coming in, push the price up. Let's take a look at the S&P and see if that's any clearer. Well, it's straightforward by the looks of the S&P. It's straightforward. Everybody just bought wads of puts, wads of calls. Okay, so everybody just bought loads of calls from the open, and the price went up. So fair diddles. Massive volume in that spike lower there, and buyers came straight back in and picked up that bit of business right there. Let's take a look at Tesla this morning. You can see Tesla's under a lot of pressure this morning. And again, you can see some put options coming in. The buyers try to carve out a bottom edge here. Sellers have taken back over the Tesla world. Looking at GLD this morning from the open, you can see that most of the people in the GLD markets have been bullish from the open. So buyers into the low prints, but obviously quite a distance on those low prints before you found the bottom edge. Absolutely.